Alright, y'all. So in this video, we're gonna go over market trends. Alright, I'm gonna get straight into it. So there are three types of trend. There's an uptrend, there's a downtrend, and then there is consolidation, which is like this. Right. Now, what does any of this mean? An uptrend is going to consist of something called higher highs and higher lows. So, coming here, we just came and created this high, right? Why is it a high? Because this is the highest point we are currently at, right? So we're gonna go ahead and take this and make this our higher high. What happens? Price pulls back. We want to see price continue higher, right? For an uptrend, we want to see price continue higher, and this floor not be taken. So this floor would be considered our higher low. As long as this floor is not taken, we should not see nothing more than another higher high and a higher low again, right? So we should be expecting this, a second floor to be formed, something similar to that, right? So let's see what it does. Cool. Got that new higher high. What did price do? Came here, formed another floor. Now, how do I know if it's a higher low? Well, as long as these floors are not being touched, or as long as these floors are not doing this, as long as the floors do not get touched, it will always remain a higher low as long as new highs are being made. Think of the highs as peaks and the floors as like resting points. All right, you hit a peak, you come back and rest a little bit before you go for another high. Right. So let's continue it. Sorry about that. Here, created high. So now we have a higher high. Right? It looks like we pulled back here. So now we have a new floor. What is that? A higher low. If we are consistent of the exact same thing, higher highs, higher lows, higher highs, higher lows, we are in an uptrend. You don't want to be looking for sells or anything. You want to be looking for buys, right? And price just continues to do the exact same thing. Price shoots up real heavy this time, pulls back. This is your new floor. It's that simple. What do you want to see? You want to see another high get put in. As long as you see another high get put in, you are still in your uptrend, right? What happens here? Shoot all the way up. Boom. We're just waiting for it to pull back so we know when our high is. Cool. New floor. Higher low. Still in the uptrend. Still looking for buys. Now what happened here? Created the higher low. Created a higher high. Why didn't we keep going? Why did it come and touch the floor? Now we're thinking about changing trend, possibly, right? Just because it's the floor doesn't mean we're about to just shoot down. It could also mean we're just coming down a little bit to continue back higher. That is very, very possible, right? It happens all the time. But in this case, it won't, right? So in this case, we're about to shift market trend, and we should be creating lower lows and lower highs. So now that the floors for higher lows have been broken, the price is going to create something called a lower low. Right? The lower low is the same as a higher high, except it's a downtrend, right? The lower low is the most lowest it's been. Right? It's the lowest point price has went to. And we also have a lower high, which is going to act as a ceiling and the opposite of a higher low. So now we're going to put this right here as a lower high, and we expect the price to come down and break the new low. Right? Now we have our ceiling. Boom. New low is broken. All we're doing is waiting for price to come up again to give us a new higher low. Have our lower low right here. Boom. New ceiling, another lower high, and another lower low. But how far are we gonna go down before we create another one? Here, okay. What is price doing? Price has pulled back. This is possibly going to act as our new ceiling. Possibly. If we could break that low, right? Waiting for that low to be broken. Now what happened here? We're consistently making a downtrend. We're looking for sales. What happened here? We are in another phase of a market trend. Well, not market. We're in another phase of a market condition. Consolidation. This is the type of market condition you want to avoid. You want to trade when price is doing lower lows and lower highs and not consolidating. Like when it's consolidating, you're gonna see lower lows, a higher high, another lower low, then another higher high, then a higher low, then a lower low. Like it's gonna be mixing back and forth. A clear trend is gonna have the exact same thing: higher high, higher low, or lower low, lower high. Right. So here we just sit here and go sideways. Imagine you're still looking for sales, and then you enter here or whatever, and then boom, you lose the trade. Enter again here, lose the trade. Enter a buy here, lose the trade. Enter a buy here. What happens? Lose the trade. Like you don't want to trade in consolidation versus you trade over here. Boom, I'm entering a buy here. You know we're in an uptrend. Keeping my stop loss whatever. Boom, the trade won. Move it up here, trade still won. Move it up here, trade still won. Move it up here, trade still won. As long as you're in that higher high type of phase, you're gonna at least get you're at least gonna get over 60% of your trades, right? As long as you're following the market trend, right? And you have a solid strategy. Your strategy will be based on if market is trending or if market is reversing, right? Some people trade continuations, higher highs, higher lows. You're following trend. Some people trade the opposite. They trade straight from a higher high and then right to a lower low. Some people trade reversals. So when price is shifting trend, that is called reversal. Some people only trade that. And it's way more high risk than if you just follow the trend and take your chances of a condition, of the market condition that's continuing, right? So if you just sat there and did that, it would be way more easier. So I definitely recommend when you're forming your strategy to form a strategy that's based on a continuation type of setup. Now, what is a continuation setup? A continuation setup is nothing but when price is trending in one direction. Price is making higher highs and higher lows. A continuation is entering off of a higher low. Or if price is creating lower lows and lower highs, a continuation is entering off of a lower high to create lower lows. Reversals is price creating higher highs and higher lows, and you're trying to wait for price to, and you're entering for price to go down. Some people would have took a short right here. When price is creating obviously higher highs to continue up, some people would have tried to take this, right? Or some people would have tried to take a long here at this lower low, right? And because they're going against the trend, they're going to get cooked almost every single time. But it depends on the strategy you are using, right? So that's all I got in this video for the 3 types of market conditions. And yep, we have uptrend, downtrend, and consolidation. You definitely don't want to be caught in those. So like I said, in the next video, we're going to go over break of structure and change of character. And I'm telling y'all, man, be ready. Definitely be ready. It's going to be a very, very interesting video. It can be advanced for some people. So definitely keep staying your P's and Q's. Take notes as much as you can. Study it because it's about to get a little advanced. I'll see y'all in the next one.